Good evening and welcome to Chapel Hill Town Hall. Tonight we are having an informational discussion on the subject of the Orange County land transfer tax that has been proposed and is on the ballot this May. We have with us tonight several people who are going to talk to you about the land transfer tax. We have Mr. Joe Kopowski speaking in favor of the land transfer tax. Mr. Mark Zimmerman is speaking against the land transfer tax. And Mr. Rod Visser is here on behalf of Orange County to give us a factual presentation of the entire issue of the land transfer tax. My name is Vicki Boyer, and I'm here tonight as the moderator, and I'm speaking on behalf of the League of Women Voters of Orange, Durham, and Chatham counties. So let's get started right away and have Mr. Rod Visser come up here and give us some facts, just the facts, right?
Thank you. And before I get started, I'd just like to welcome our audience that's viewing on the Town of Chapel Hill's Government and Access channel, and then others who may view a rebroadcast of this presentation tonight during the next several weeks on Orange County's Government Access channel or other media that we may be able to present this information on. I'd also like to thank Vicki and the League of Women Voters for graciously agreeing to moderate our discussion this evening, and also to the Town of Chapel Hill for allowing us to use their facility this evening. I'm going to take just a couple of minutes to cover some of the basics about the Orange County land transfer tax referendum that comes up on May 6th of 2008, just a couple of weeks away. I think our slides may be a little slow here. Well, the first question that you might ask is, well, what exactly is a land transfer tax? Well, it's a tax that's on a percentage. Well, my slides are going crazy here. Excuse me for just a second. We'll get back to that slide. Okay, it is a tax on a percentage of the value of the sale of real property, and that includes houses, office buildings, undeveloped land, other commercial buildings. It's a revenue source that was authorized for counties in North Carolina by the General Assembly during their 2007 session. And importantly, it's the final item on the May 6th ballot in Orange County. So as you may know, I know there's a lot of interest in the presidential primaries that are coming up, but it's important that folks don't stop at the top of the ballot because there's a lot of other statewide offices. And if you flip your ballot and look at the bottom of the backside of your ballot, you're going to find the land transfer tax referendum for Orange County. How does a land transfer tax work? Well, it's important to note that the way the law is written is that the seller is responsible for the payment of this tax. It will work basically the same way that the current excise tax on real property transactions works. As you may know, there is a 0.2% tax that's collected by the Register of Deeds at closing when property changes hands now. This land transfer tax would also be paid at the closing of the sale when the deed is recorded. And it's important to note that there are some exemptions that are applicable, such as transfers by inheritance or gift, merger of corporations, and other transactions that are exempt from the excise tax on conveyances that's covered in Chapter 105 of the North Carolina General Statutes. How much is the land transfer tax? Well, it's calculated based on the value of the sale of the real property. As an example, a house and lot that would be sold hypothetically at Orange County's 2007 median price of $250,000, you'd take the 0.4%, multiply it times that $250,000, and the seller would be responsible for the payment of the transfer tax of $1,000 at closing when the deed's recorded. When would the land transfer tax take effect? Well, if it's implemented on July 1st of 2008, Orange County's budget staff estimates are that it would generate about $3.5 million in fiscal year 2008-2009. How would the proceeds be used? Well, the Orange County Commissioners indicated by a resolution they adopted on March 18th of this year their intent to use the proceeds for currently unfunded or underfunded public school and park projects. This slide shows you what you will see when you pick up your ballot and get ready to vote. The form of the ballot question is exactly specified in state law, so there are no additions to it based on which county has it on the ballot. It's county land transfer tax, real property transfer tax at the rate of up to 0.4% of value or consideration, for or against. Why does it matter whether you vote on this issue? Well, Orange County voters directly affect whether or not this tax is going to go into effect. The state law from 2007 requires that county voters must approve this tax before a Board of Commissioners can put it into effect. So, on May 6th, if Orange County voters do not approve this tax, it will not take effect. So, it's up to each and every voter to decide whether or not you're going to participate in this important ballot issue. This is just the basics that I've given you here, so hopefully there are more questions that you may have, and we want to give you some resources as to where you can go to get more information. First of all, you can go to the website that we've set up specifically for this purpose, www.yourchoice-oc.com. We also recognize that not everybody has access to a computer, so we certainly welcome your phone calls at the County Manager's Office at 919-245-2300. Likewise, if you have comments or questions, you can send those to us at info@yourchoice-oc.com. And I can tell you, I'm monitoring all that email, so I promise you that I will take a look at it and respond to you with the best answer I can give you. Likewise, if you don't have access to a computer, please call the County Manager's Office number at 245-2300, and I will do my best to answer your questions. And if I don't have an answer for you, then I'll get one and get back to you. And finally, what we're hoping that you can do this evening and during the next couple of weeks as you get ready to vote is gather information, learn about what the land transfer tax is, how it works, what some of the arguments are, and then decide whether you vote for or against. Please make sure that you do vote on May 6th. And that's the end of my presentation.
Now, Mr. Kapowski's going to come up and make a presentation for us. And he can be setting his stuff up while you go down.
Thank you, Vicki. Ladies and gentlemen, good evening. My name is Joe Kapowski, and I live in Chapel Hill. And I want to thank the League of Women Voters, Vicki, and Orange County government, Rod, for giving us this opportunity to describe the tax. And Mark, also, I look forward to this debate. Let me spend a second telling you who I am because it's relevant to this. I am a longtime resident of Chapel Hill, and as you know, we are a world-renowned center of education and healthcare. And I, like most of the people here, came here for that reason. I came here to go to grad school way back when, and with a couple minor exceptions, have lived here ever since. I have two stepsons, and they went K through 12 in the Chapel Hill Carrboro school systems, and they got an excellent education, and I would thank both of the school systems of Orange County for their education. In the 1990s, I had the pleasure of serving on the Chapel Hill Town Council, and today I'm here as the chair of a grassroots organization called the Orange Citizens for Schools and Parks. Now, this is a local organization funded, staffed totally by local people and funded totally by local people. I have no vested interest in the success or the failure of this tax. I'm here simply because I love my community. The website of Orange County Citizens, Orange Citizens for Schools and Parks is given, for schools, for parks. We are an advocacy group for the land transfer tax, set up solely for this purpose. Rod covered this already. This is what's on the ballot. I won't spend time on it. Oh, I'm sorry. Okay. Thank you, Rod. There is the website for our grassroots organization, 4schools4parks.com. We invite you, of course, to visit that website. Here's what's on the ballot in May. Rod has already covered this. Here is the real estate transfer tax, misspelled. This applies to residential, commercial, and unimproved properties. It does not apply to gifts or inheritances. So for people who want to leave their house to their kids, the tax is not paid. The money will be used in a combination decided by the county commissioners for school construction and park construction. Why do we need this tax? And I have 2 slides on that. The schools have to be built. We're way behind in parks. And by North Carolina law, the construction of schools is a local function. And there's sound historic reasons which one could argue that today don't apply, but they still exist in law. So how do you pay for a school? Well, the only options that the county commissioners have are to either increase a property tax or to generate a new revenue source, in this case, the real estate transfer tax. And that is why we are facing this issue on the ballot in 2 weeks. Now, our group believes that there are 5 reasons why people should vote for this tax. The first is it relieves pressure on the property tax. It does not increase annually as property taxes do. It helps people stay in their homes, especially elderly people on fixed incomes. What we hear repeatedly is for elderly, we're income poor, all our savings are in our house, we can't pay our property taxes, they're increasing too much. This is basically a delay on the property taxes. The payment is delayed until the sale at the time that the seller is receiving revenue. And finally, this tax impacts fewer people than the property taxes do. Who are we? We're a grassroots organization of local citizens funded by local private contributions. However, this is David and Goliath, and we're David. We are up against the North Carolina Association of Realtors, who are spending a small fortune in statewide funds to fight this tax. Many of you have received their brochures. They are running ads on CNN and CNN headline news on television. And I'll be quite frank, even if I were against this tax, I would be embarrassed by these television ads. They are the darkest negative ads I've ever seen. We're funded locally. We do need contributions we have a very modest advertising budget, and we ask you to send checks to the address that is on the screen. And please write your occupation and your employer on the memo line of the checks. And of course, as Rod did, I encourage everyone to vote on May 6th. Thank you very much. Oh, early voting has already started at the Moorhead Planetarium, at the Senior Center, at the Seymour Senior Center in Chapel Hill, and several other sites throughout the county. I have placed some of our flyers on the rear table, and I would like to ask everyone to please join me in voting for this tax. Thank you very much.
Thank you very much. Mr. Zimmerman, you'd like to step up now and...
I think I can go escape. That's what I want.
Oh, you have one too.
Get that off.
Just a moment for changing out the computers.
Actually, not changing out.
No, just
No.
well, putting it up there.
Putting it up here is right. We all ready? Hi, my name's Mark Zimmerman. And I would like to start also by thanking Vicki and the League of Women Voters. This is a great service you're doing. This is a very, very important issue, and one that we all need to weigh very carefully, because the decision made on May 6th will, if the tax is passed, will be a permanent one. The tax will be around for quite some time. I'd also like to thank Rod for all the work that he's done, not just tonight, but over the last couple of months on this issue at the county, and Joe for participating tonight as well. I'm here. I'm a property owner in Orange County. I also own a business that is in Orange County. I am the president-elect of the Greater Chapel Hill Association of Realtors here. My business is a real estate agency in Chapel Hill. I am the past chair of the Chamber of Commerce of Chapel Hill and Carrboro, and I am also speaking on behalf of another grassroots organization, the Citizens for a Better Orange County. So that's a rather long introduction, but now I'll get into just talking with you. I'm just going to speak what I have to say, because this is going to affect people, and I really want you just to listen to the point of view we have about this tax. We really believe that this is the wrong tax, and it's also the wrong time for the tax as well. First of all, on May 6th, or if you're doing early voting, and I encourage that as well, let me tell you what this vote is not about. It is not a vote on whether to spend money. That's not what's on the ballot. It's not a vote on schools and parks. We all appreciate our schools and parks. We sell this community and our schools and parks every day to people who are moving to our area. What this vote is about is on how we raise the money to spend on those projects and others, and whether this referendum, this new tax, is a fair way of doing it and also a prudent way of doing it, and we don't think so. What this is also about is about people. And whether you're sitting here tonight listening to me, or you're sitting at home listening to me at some other time, you can think about this impact of the tax on yourself, but I also want you to think about it on other people in Orange County and how it will affect those people this year and next year and the years following that if this tax is passed. People and families in Orange County are the ones going to be paying this tax. I'm going to go over a couple of issues, well, more than a couple, because there's a lot of things wrong with this tax. The state legislature passed this option for the county last year, last summer, in the heat of a budget battle. It was not well thought through. There's lots of issues with it, and I'm going to go over a bunch of them with you. I'm going to talk about the problem of taxing just a few for the benefit of the many. I'm going to talk about the high cost to the few that results from just taxing a few. I'm going to talk about this being a tax on savings that people have in their homes, increases in the property tax burden. I'm going to talk about the regressive nature of this tax, the fact that the tax is very broad and will tax some people that we really don't want to tax. I'm also going to point out that this is not a tax on growth. It's often characterized that way, that it will hurt all of our efforts for getting more affordable housing in Orange County, and that it's a very unreliable and unpredictable way to raise revenues for these important spending needs in the future. First of all, this is the tax on a few for the benefit of the many. These tax dollars are going to go, as has been pointed out, at least next year, to schools and parks, and future boards of commissioners can choose to spend them in any way they want. They go into general revenue funds. Everybody will benefit from the spending on this, everyone in Orange County. But unfortunately, only a minority in any given year will pay the bill for that. And let me put some perspective on that. There's 120,000 people who live in Orange County, according to the census, but there were fewer than 1,800 real estate transactions last year. That means fewer than 1,800 people will pay this tax bill that will benefit 120,000 people. That's only 1.5% of our population. What that means is that burden on those 1,800 transactions is very, very high. Just think about it. If you have a bucket of water, how much water is in it? But if you just put that bucket of water on the ground and spread it out over everything, how low it would be. The average sale last year in Orange County of property would have generated a transfer tax bill of $1,371. I want you to think about writing that check out when you're closing your property for $1,371. That's going on you for the benefit of everyone. It would take, if you were to equivalize that to a property tax increase spread out over everyone, over 15 years of paying that property tax before you pay off that one bill. If you're going to stay in your home for over 15 years, this is a great deal for you. But if you're planning to move anytime under 15 years, this is a bad deal for you. And one other distinction I want to point out, unlike those annual property taxes, the transfer tax is not deductible from income taxes. April 15th just passed. One of the wonderful things when you're doing your federal income tax is you can take that property tax bill and deduct it. You cannot do that for that $1,371 if you were the average home seller last year. Secondly, what is this tax really on? It's a tax on your property, which means it's going to come out of the equity you have in a home. And in this country, like it or not, home equity is where home savings is. One of the things to realize, it's only 0.4% of the sales price, but the home equity you have is much less than the sales price in your home. So the effect on your savings is much higher. If you had a $200,000 house and you have $10,000 in equity in it, your tax bill would be $800, and that would represent 8% of the savings you have in your house. So that 0.4% is a deceiving amount because it's on the total sales price. That represents months of mortgage payments, depending on what kind of interest rate you have. And what is that money used for by people who sell their houses? Well, either to help them buy their next house. If they're in retirement, it's helping them with retirement. It's helping them pay off bills. And it's helping with college tuition payments, lots of things. You can decide how you'd like to spend your home equity, but you'll be able to spend a lot less of it if this tax passes. Thirdly, this increases our property tax burden. We hear time and time again, we certainly hear in our business, and we've heard tonight, that we have very high property taxes here. Well, I don't understand how the solution to high property taxes is to add a brand new tax on properties. If we want to diversify our tax base, we need to find another tax that doesn't fall on property owners if we want to alleviate their burden. Fourth, this is a regressive tax. Why? Because not only is it a property tax, it's also a sales tax. And I think we all know that sales taxes in general are regressive. They fall more heavily on lower income people. This is a sales tax. It just happens to be on homes. It's a single flat rate tax. That means low income families, fixed income families, seniors, and young families, the ones who can least afford it, will get to hit by this tax the most. And that's because they spend more of their income on housing, and more of their wealth, family wealth, is in their home equity. They don't have, like wealthier people, a lot of retirement accounts and 401ks around on the side, a lot of other investments. This is their investment. Fourth or fifth, or wherever I am on this thing, we're taxing the wrong people too often with this tax. The only exceptions here are when there's no sale involved. Any other sale of property is going to be taxed. What does that mean? It means if a church sells property, the church will be taxed. Nonprofits, similarly. If you sell a conservation easement, that will be taxed. Affordable homes, people at the lowest income of home ownership will be taxed. It's also a big personal burden. There are many people right now who are selling homes in this market that aren't making any money. In fact, they have to bring money to closing. They're going to have to go and borrow more money to pay this tax because it's on the total amount sold, not on the equity alone. I want to clear up an issue that's been talked about quite a bit in the press, and that is that this is a tax to pay on growth. It's not. Let me remind you that the sellers pay this tax, not the people moving into our community. And even the people moving into the community in Orange County are mainly people moving into existing housing. Only 14% of the sales last year were new homes. And that's not a surprise to us. We live in a very slow growth county, and that's not going to change over time. That means 86% of the people who will be paying this tax aren't facing any new additional burden on services. It's not a tax on growth. There are taxes you can put on growth, but not the transfer tax. This tax also will have a measurable impact on any new affordable housing in town. In most sales, resales, the seller is just going to pay the tax and they're just going to have less left over when they sell their house. But it'll be different when business people like developers or investors pay the tax, because for them it's just another cost, and they're very sophisticated about this. Developers will add this cost into new housing, and unfortunately, it'll be added in up to 3 times. When they buy the land, the person selling the land will pay the tax. When they develop the land, it'll be worth a little bit more. The tax will be a little bit higher when they sell to builders. And finally, when the builders build a house on it and sell it to new people in town, it'll be taxed one more time. That 0.4% will add up quickly, and of course there's markup in all that too. That's not going to help make our new affordable housing affordable. Finally, this is a very unreliable and unpredictable tax because it's tied to the real estate market. And I don't have to tell anyone right now who's reading the headlines what our market is like. It's going to go up and down over the years. This real estate market is very volatile. It's a very challenging market right now. Already, last year, in just the last 6 months, the projected revenue from this tax went from $4.1 million down to $3.5 million, and that's just taking the projection to the end of the year, not looking at the sales figures this year. That's a 15% decrease in tax revenues. Now, if I was in the county budget office and I wanted to have a good, predictable, reliable, growing tax, this is the last thing I would choose because it's completely out of the control of the county on how much tax revenue is coming in. So to sum up, we really shouldn't be taxing the few for the benefit of the many. That's just not the way we should be taxing people. That's going to result in a very high tax to those few who are taxed. It's going to take the tax from savings. It's going to increase the property tax burden because it is just another property tax. It's going to hurt lower income people more. It's a sales tax on homes that's regressive. It's going to catch a whole bunch of people out there that shouldn't be paying these taxes that we normally wouldn't tax. It's not something to attack the growth in county. It attacks people who have been here before and are just moving into existing homes. It's going to hurt our efforts, our already struggling efforts to provide more affordable housing, and it's not a good tax for the future. That's an awful lot. It's quite a mouthful. But there is a lot wrong with this, and I really want to encourage everyone to think carefully about this. Last fall, 16 counties across North Carolina placed this tax on the ballot. In all 16 counties, 79% on average people voted this tax down. They all thought hard about whether this was the right way to raise revenue for the future, and almost 80% said no. And there's good reasons for that, and I've just gone over them. We have some more information as well on a website. It is noorangeHometax.org. I do encourage you to vote. This is a really important issue that we'll have to live with forever if it gets passed. There are other ways we can raise revenue. This really isn't a good one they've given us this time. I think we should tell the county commissioners to go back to the drawing board and bring us something else in November. Thank you very much for your time.
Thank you. Thank you, Joe, and thank you, Mark, for coming in this evening and giving us this information and your outlook on this issue. I've got a couple of sort of procedural questions, and maybe Rod can answer this, or maybe Orange County Attorney Jeff Gledhill, who's here, can answer this. If this is passed on May 6th, when does it go into effect?
Well, there's a procedural step that's involved. If this were to pass on May 6th, then the Board of County Commissioners would issue a 10-day public notice and then could adopt by resolution the levying of this tax. If that were all to happen, let's say in May of 2008, for example, then the tax would go into effect on July 1st of 2008.
July 1st, 2008 is probably when it could go into effect. Is there any kind of grandfathering clause in this where someone who was involved in a real estate transaction before the tax went into effect would, and then the tax goes into effect, would they still have to pay it?
I believe it's based on, when the closing actually, what
Date of
the law
closing.
is that's in place when the transaction is actually closed or completed.
Mm-hmm. And the statute, as it's written, simply says that it's going into the county general fund. Is that correct?
Well,
That
I
is
think
correct.
another way of answering that question is to indicate that the statute does not limit how the proceeds could be used. So basically, they can be used for any public purpose that counties are empowered to spend public dollars on.
Mr. Kopowski, do you think that this is going to have an impact on affordable housing in our county? Because that's something that everyone in this county talks about quite a bit and is greatly in favor of.
Not exactly, because there are other factors. By North Carolina law, health, education, and welfare are county functions. Okay? The affordable housing issues would fall under the auspices of welfare. Now, that may sound too strict, but I don't mean that with any disrespect. The county commissioners, of course, give grants to these various organizations, and they can set the size of the grants they give. So they can compensate for this. And when Mark said we're going to be taxing some people that we really might not want to tax, I agree, we wouldn't want to tax the Orange County Land Trust, for example. But that can be compensated for by the county commissioners.
Okay. Mark, you want to make a comment on that?
Yes, and I'm not sure about the legalities of what they can and cannot do. I would hope that if we did get saddled with this tax, that we would have the good sense to get some money back to the Land Trust and the other affordable housing agencies that we have in this town that manage that. But there are lots of families who are in low-income housing in this county that aren't in official affordable housing programs. As we sit here in Chapel Hill, the price of housing is quite high. But it's a different story when we get outside into the county. And there are lots of people who are in very affordable homes, but they're just not in the land trust. And those people would not be taken care of by the county. I think there was close to 20% of the sales in Orange County last year were in homes under $150,000. That surprises people down here. But we have a rather diverse housing base, and it's all those people that I'm worried about with this tax.
Joe, do you want to make any other comments about that issue of affordable housing?
No.
Okay. Mark, when people sell their homes, they do sit down and write some big checks that are kind of scary to them, and one of them is for the real estate commission of 6%. And that's 6%. This tax is only 0.4%. Why is this so hard to swallow? Well,
you'd have to ask a seller about whether they want to swallow this tax. But let me, first of all, correct you on something.
Please.
The 6% that is often used is something that isn't an average. It isn't anything set. Each agency and each real estate agent sets in negotiation with their customers what that amount is. The distinction, though, the important distinction is that is the choice of the seller. If the seller sees value in using a realtor, and I hope they do, that's my profession, then they'll pay them what the realtor, what they think the value is to sell their home. But there's no obligation to, and many people around here don't use a realtor. They sell their homes for sale by owner. There's lots of new companies out there that will sell for much less than the amount that you do. But the point is, it's the choice of the seller. This tax, of course, is not the choice of the seller. It's something that he or she is obligated to pay. So I think a big difference there between the two.
That's a good point. Joe, do you have any comments on that?
I'm not in the real estate business.
Okay. Joe said he lives in the county and his children went to school here. You own property in the county and a business in the county. Do you also live here, Mark?
No, I did for 12 years, but 2 years ago we just moved across the county line to Durham. And so I'm now a resident, a nearby resident, but I spend every day on Franklin Street at my office here, and was a previous business owner for years and years with a bakery. But I still am a property owner, so I do have a self-interest. I would have to pay this tax when I sell that property.
Okay, thank you very much. What else do we want to ask anybody about tonight? Do y'all want to ask a question? Tell me what it is and I'll repeat it for the microphone.
Is it possible to not tax the ultra low-priced properties that are sold, or does it have to be across the board?
Is it possible that this tax could not be applied to ultra low-cost properties, or does it have to be applied straight across the board?
Well, the answer to that question is counties are very limited in what they can and can't do. The state basically tells them what they can and can't do, particularly related to revenue sources. In this particular case, the law is written specifically to apply to all situations, so there's no provision in the law as it's currently written to make an exception along the lines of what you just mentioned.
Rod, maybe you can answer this too. I know that there are 5 or 6 counties in North Carolina that have had this land transfer tax for 20 years or more. Did Orange County do any background look into how that had affected those counties over the years?
Again, Orange County's interest here is in putting this on the ballot and letting people decide. The county's not, advocating for or against passage of this. And again, I guess I certainly want to say how much I appreciate what Joe and Mark are doing tonight, because I think what they're doing is they're giving folks some information that will help them decide, what arguments are most persuasive to them, and then help them to decide to vote. Now, having said that, we did not look into what worked in Dare County or Currituck County or what have you, how their revenue sources have been affected. I know there are folks that have done that. That information was shared with the Local Revenue Options Education Advisory Committee that the county commissioners appointed back in the fall. But as you mentioned, Vicki, there are several counties down east that do have a land transfer tax authority and have had those in place for probably dating back to the late 80s or thereabouts. But the land transfer tax that we are talking about tonight is one that was specifically created by the General Assembly in 2007 and is one that's applicable to other counties that don't yet have a land transfer tax in place that
Okay.
may want to consider placing on the
Mark, do you
ballot.
have any idea how this has affected other counties? And I know it's available in other states as well. Do you have any research on that?
I don't have any research, but I do know that there is research available on what it's done there. My point would be, if people seek that information out, that every county is different. And what we need to do is look at how we think.
We are really different.
Well, we are. We're reminded about that every day, aren't we? But some of the distinctions that we have here in Orange County, I think, are important on whether this is the right tax for us. And one of those I did touch on, but I'm going to mention again. We are a very slow growth county, and I think everyone's been very happy about that. And we have not a Wake County that has lots and lots of new property coming on and lots of transactions. And I think that's one of the issues with this tax. If we were in Wake, a very high growth county, it would generate a lot more revenue. I still think for the other reasons it wouldn't be the right thing to do, but at least there'd be some upside.
Okay.
Here, I don't think we're going to be changing our growth policies, so regardless of what's happening on some of the coastal places, it's not going to be applicable to here.
Thank you. Joe, do you have any comments on that?
Yes, I do. This is not the first forum and the first media exchange we've had, Mark. You have often stated about Dare County as an example of very high property taxes as a consequence of their real estate transfer tax. Now, Dare County has 2 parts. It is 130 miles of the Outer Banks of North Carolina, from the town of Duck down to the village of Ocracoke. And the only part of Dare County that's on the mainland is the Alligator River Wildlife Preserve, which I believe has 0 human inhabitants. Now, of course, Dare County has high property taxes. Beachfront property is very expensive, and the very treacherous environment that Dare County exists in out in the Outer Banks requires that the services they provide be heroic. The reality is that none of the 6 counties in northeastern North Carolina are at all a good model for Orange County in how our property tax rates would react were this real estate transfer tax put in place here.
Okay.
I thought that's what I just said, but I agree.
Orange County's unique.
Yes.
I think we all agree on that, right? Barbara, did you have any questions based on anyone else have another? Yes, ma'am. Speak loud, and I'll repeat it for the microphone, okay?
About an hour ago, I decided that I would come down, and I'm very good at speech, and I'd like to be able to speak to the.
How long is your speech, ma'am? We don't have much time. It's better if you have a question, if we can just do
I
it.
don't have a question, I'm just wanting to speak on behalf of the council's tax.
On behalf of it, that's what these gentlemen are
I
doing
know
here.
they are, but there are pros and cons.
Well, that's what they're telling us.
Thank you.
If you'll bear with us, and sir, do you have a question?
Yes, I wanted to ask Mr. Zimmerman a question. You presented your organization as being a grassroots organization. seems to be the case is that there's big money coming from organizations made up of people who don't live in Orange County. They're pouring a lot of money into this campaign that you're using for a blitz, a media blitz, to convince us all that this is a bad idea. The only thing I haven't heard from this realtor, real estate developer influence group is what is the impact going to be if this tax passes on your business? You know, why is it that you guys are spending so much money to convince us folks that this is a bad idea?
So if I can see if I can repeat that for the microphone so it'll get onto the
Let me just
television.
I would like Mr. Zimmerman to tell us what he anticipates the impact would be on the real estate business, the realtors, the builders and developers, all the people who are against this tax. Why is it that you're spending so much money to defeat this?
Right.
What is your interest in it?
Vicki, do you want to paraphrase that?
That's a very good question, and the question basically is the real estate lobby, shall we say, is spending a lot of money trying to convince people not to vote for this tax provision, and where is that money coming from, because not all of it's coming from Orange County, obviously, and why is it that the real estate business is so dead set against this when there are actually higher fees that are paid in the process of selling a house?
Well, I don't care about that. I mean,
Okay. Why is it going to impact their business so badly?
decision, you're putting money in to save money elsewhere. What's that all about? You know, there's been no
I
Tell
think,
us, Mark.
I think that's a very fair question, and we certainly have taken a lot of criticism without a lot of detail behind it for being involved with this issue, not just here, but in the past, and I'm sure in the future as well. The first thing that I do want to say about the organization, Citizens for Orange County, there are 1,200 Orange County citizens who have signed on to that. That's not to say, I'm not trying to say that there isn't a lot of realtor involvement, both realtors here in Orange County and realtors outside of Orange County, because it is an issue that's very, very important to us. The next part of your question is, how is it going to affect our business? And that's a very simple answer. It's not going to affect our business at all. I have to remind people that sellers pay this tax, realtors don't. If you looked at some of those other counties that have had this tax, it's some of the highest growth counties in the state. This tax itself is not going to hurt the overall real estate market. It's not paid by the realtor. It's paid by the sellers. Now, who are the sellers? The sellers are our customers. Every day, half of our customers are sellers and half of our customers are buyers, which means half of our customers are going to have to pay this tax right now, and half of our customers are going to have to pay this tax for a very, sometime during the future. We have, we're a member of the National Association of Realtors, which coincidentally is 100 years old this year. It was founded on two principles. One was to bring professionalism and licensing to realtors, which we've done over that century, and the other was to look out for the property rights of our customers. That's part of our charter. That's what we do. Each one of our customers has one single voice. It's part of our job to advocate for them. We're their agents. We've taken that to heart. It's been done for decades and decades and decades. This is a tax on property. It affects our customers. We step up. There is money coming in here. It is important for that principled reason. That money comes from individual realtors who give it, whether they're here or other places, and this is a very important issue for our job as agents for our customers. I hear from my customers. I hear from the people that we have listings right now. Will this pass? Will I have to pay it? Can I sell my house before July 1st? I hear that. I want to give them the best answer that we're working on their behalf to make sure that we find a better way of taxing people and not adding a new tax on property in Orange County.
Thank you. Joe, do you have any comments on that subject?
I don't think Mark actually answered the gentleman's question. If, as Mark says, it will not have an impact on his business, and it will not have an impact on the commissions, why are you, realtors and the North Carolina Association of Realtors in particular, spending so much money to defeat it?
Well, I think I could repeat what I just said. we're spending that to protect the property rights of our customers. I haven't heard anyone explain how this will financially impact on us, and you can make that allegation, Joe, if you'd like, but you're going to have to explain exactly why you think that's going to happen. As you pointed out, as people have pointed out, this tax has been in a few counties for years and years and years. I talked to those realtors. There's been no impact on the market there, no impact on the commissions that they can negotiate with their clients. There's been no impact on the realtors themselves. It does affect the sellers. And one of the first things we do when we sit down with sellers is we do a mock-up of what the closing table will be like. If you sell your house for this much, this is how much you're going to take home. And we get questions about everything on there, believe me. And now we're going to have to add a new line if this comes in. We hear that, and it's our job to try to get them the most money. And we would rather have them not have this additional line on that closing statement. That's our job. We're stepping up to it.
Thank you. Anyone else do you want to have a follow-up?
Yeah, I'm not sure. I know you tried to answer my question, but I don't buy it. I don't buy the answer. It doesn't ring true. Realtors only make money when someone sells their house. They don't make money when someone's thinking about selling their house. And one of the things that might determine whether a person sells their house or waits to not sell their house is how much they're getting back. Okay, so if this tax passes, it really might influence the decision to say, I'm not going to sell the house, or maybe I'm not going to use a realtor. I really have to cut down on my costs here, so I'm going to just do it on my own. There are those things that I can't, human nature being what it is, I don't think you guys are bad businessmen. You got to be good businessmen. So you're thinking about, if we're going to invest a lot of money in trying to influence public policy, you want to have a good benefit on our business. And you're saying, no, there's no business impact. We're just trying to be, we're looking after the poor people, and we're looking after our customers and everything. It all sounds like it's so selfless, and yet I don't believe it. Can you convince me that?
Well, I'm not sure I can convince you. I mean, you have a healthy skepticism. That's fine.
It's not just
no.
I think a lot of people.
Well, I understand that. The first instance that you talked about, whether someone will put their house on the market or not, is a very good one to bring up, because if this is going to keep someone from putting their house on the market, they're going to die in it, because this tax will be around forever. As for whether or not they use a realtor, we face that every day. And one of the challenges in this competitive marketplace in which we operate is convincing customers that we have value that will help them in the sale of their property. And as I said before, I'm very happy that customers do see that, but not all of them do. And if someone decides that their costs are too high and they have to try it by themselves, then we say, go ahead and try it. I have not heard any negative impact of this on the real estate business in those counties that have it. And I guess it is surprising in this day and age, when we all are cynics and skeptics about so many things, that those people who are in a profession, who take an oath that we're going to serve the interests of our clients, should step up when we have funds available to try to serve them on a matter of principle. And it shouldn't be a surprise, however, that a matter of principle about private property is something that real estate agents and realtors should step up for. So I'm not sure if that's convincing, but there's no direct impact. It's our customers who pay this tax.
Okay, thank you. I think we're actually running out of time here. Thanks to everybody for being here tonight and for your questions. They were very good questions. I'd like to say, on behalf of the League of Women Voters, thank you very much to the town of Chapel Hill for allowing citizens to use this great facility that we have here. It really adds value to our community that we can have something like this and use it in with various groups. I'd like to thank our engineer, Dan Overby, for making all of us look like stars on government access cable TV. You didn't know that, did you? And Rod Visser and Jeff Gledhill, who are here tonight from Orange County and helping to they made the arrangements for tonight's forum, which was very nice. Thank Joe Kopowski and Mark Zimmerman for being here. They are both community activists and have been around for a long time and have contributed greatly to our community. We do vote on May 6th, and let's wait and see if we get as much media attention as was in Pennsylvania the other night. Maybe we'll have some, what do they call them, helicopter journalists coming into town. So remember to vote. Early vote is now. The election day is May 6th. And before we close, I want to let Mr. Zimmerman and Mr. Kopowski give us a very brief, maybe 3 of your favorite points of the pro or con for this tax. And Joe went first, so let's have Mark, if you got just 3 quick points to make against, as a con against argument.
Got it. This is not a fair way of taxing our citizens. It's putting too much burden on a minority for the majority. It will hurt people who can least afford it, and it's not a great way to raise money over time in Orange County. And I want to thank you all as well for this evening and for the debate we've had over the past couple months and will continue to have for the next week and a half. It's heartening to have this kind of debate on an issue that's so important to us in our future.
Thank you. Joe?
I'm going to make one point, Vicki, but it's going to take me a few sentences. It's very easy to be negative. It's very easy to say, don't do this damn tax, okay? But the next school has to be built. And if we don't do this tax, how are we going to build the next school? Now, the only alternative is more, higher property taxes in the short term. This allows the relief of pressure off the ever-increasing property taxes, which are hurting the low-income homeowners the most. So it's not enough for anyone to say, I don't want this tax, without answering the question, how do we pay for the next school? I don't think, and I'll stand on this, that it is not reasonable to say, well, just don't build the next school. We are a world-renowned center of education and healthcare. That's why I came here. That's why probably 2/3 of the people in Chapel Hill came here. We don't want to lose our 3 magnets, with the health of our 3 magnets, UNC, UNC Healthcare, and our public school systems. And again, thank you very much for the opportunity to speak.
Thanks, Joe. Rod, do you have any remarks you'd like to make?
I don't have any pros or cons to share because I think Mark and Joe have done a better job than I ever could, but I do want to make 2 points. One is to remind folks that may not have been able to attend this meeting in person tonight that we're going to have another forum that will be similar in format to this next Wednesday night, April 30th at 7 p.m. at the F. Gordon Battle Courtroom in the county seat of Hillsborough. And secondly, if you have questions, if you have comments, please call us, 919-245-2300 at the county manager's office, or visit our website at yourchoice-oc.com, where you can get more information. You can get links to arguments, the pros and cons that you heard tonight and others that other members of the community have shared, and send us your questions there via email as well. So thank you for all your participation.
Thank you, and thank you all very much. Ma'am, I'm sorry we couldn't get to your speech tonight because we've run out of time, but on behalf of the League of Women Voters, thank you all very much for being here tonight.